welcome to this FTI Treasury Talks, where we're going to be focusing in on the automation of your accounting output by integrating your treasury management system with your ERP system or your accounting system. My name is Justin Callaghan. I'm the CEO of FTI Treasury, and I'm delighted to be joined this morning by Marie Clarke, who's our head of finance and who importantly also manages our accounting team and delivers technical accounting solutions to a wide range of corporate clients, a lot of which involve obviously integrating and automating that output. Marie, I think it's fair to say that treasury accounting is probably at the more technical end of the accounting
Yeah, exactly.
spectrum.
It's true.
And therefore, I suppose leveraging off any sort of technology solutions, will make a big difference to that process. But like before we, I suppose, talk about some of the more technical aspects of integrating your treasury management system with your accounting ERP system, like what are some of the key planning considerations that people should think about?
So yeah, that's a very good question, Justin. And I suppose the first thing that people really should think about is, getting everybody involved in the process. You need to get your IT team involved because this is a big digital transformation process. So you need to get your IT involved. Obviously, your treasury personnel will be working with you, your accountants, and even some of your tax team should be involved in that discussion so that you know exactly what's being taken out of the treasury system, input into the ERP, because that will then feed further onto various other systems, regulatory systems, consolidation systems, and that.
Very good. And putting together a team like that, is it a big project management operation, do you think? Or
yeah, it can be a big project. Yeah. So really, I guess you have to scope it out first and decide on exactly what is required across the board. So you need to get everybody around the table. And I guess you have to get buy-in from everybody. So yes, it is a really big project. And you can think that maybe if you get lots of people around the table, it sort of develops it into an even bigger project. So what I would suggest is try to break it down into little bite-sized chunks and see what can add the most value from the outset and try and work in that sort of way. I mean, generally these processes can be done in a very manual sort of spreadsheet-based process in the past. So you're going down the route of change. And whenever there's change, you need to make sure that everyone is involved in that and people have their say and there's sufficient buy-in.
And what's the ultimate goal then? What's the end game in terms of output?
So the end game in terms of benefits of this, so the main benefits are really the data that you get. So the data that you're seeing coming through will be more accurate if it's coming through on an automated basis. So you're not getting that sort of manual Excel spreadsheet prone to error sort of way. You're suddenly getting a much more streamlined process where the data is coming through and it's more accurate. So that's really the first sort of step. And then also there's time. So the time that all of these spreadsheets and manual processes can take, that comes back to you and it can be used in terms of decision making and analysing the data that comes out. So it can work in two benefits. There's two benefits, the quality of the data and obviously the time that you save.
And then from a kind of a more technical perspective, I suppose, Marie, like you've obviously been involved in a lot of these implementations across a whole range of different accounting and ERP systems. But are there common sort of technical mapping elements that need to be considered?
Yeah, there can be common. The thing is that this process can seem like it should be similar across the board, but it can actually differ quite significantly based on the particular client and the information that they want to take out of the treasury system and then the further uses of it down the track. So the kind of common areas that would from a technical point of view, you have to make sure obviously that your chart of accounts matches. So you'd have a chart of accounts from your ERP system and that would have to be set up and mapped sufficiently within the treasury system so that the process follows through. Also, you can feed a lot of consolidation systems with the data. So things like intercompany, if there's like short codes, references like that, they would be common throughout, that we would see that should be input into the ERP system in the same way that's input into the treasury management system.
And obviously both ERP and treasury management systems have come on a long way, I suppose, in the last even just 5 or 6 years. So in terms of things that used to trip people up, like file structure and acceptability of files, has that become an easier process? Or
Easier as in, I guess people are more aware of what to look out for. But as I said earlier on, you do need to involve your IT people right from the very start, because if you involve them too late into the process, they may come up with a different file structure or say that the file that you suddenly created doesn't necessarily suit. And it really, I guess, you have to make sure from the outset that the systems you're working with, like you would hope that your treasury system is flexible enough to be able to generate a file in numerous different formats so that it can suit various ERP systems.
Very good, yeah. And tell me, like in your experience, like with the implementation of solutions like this, you know, I suppose if we look at Treasury in general, people are very interested in real-time information. And sort of, if I put it into the kind of cash arena, there used to be a stage where, you know, treasurers were happy enough to sort of have a visibility of their cash on a month-end basis and would all be manually reported. Whereas obviously that's now all been significantly automated using treasury management systems and other bank-based systems. So with the developments in both treasury management systems and ERP and accounting systems, is the concept of kind of monthly treasury accounting old hat now, or you know, what's your view on that?
That's very good. That's a good question, because it has changed dramatically. So we would have seen the delivery of a transfer of the information from the treasury management system across to the ERP would have traditionally, like in the past, happened on a monthly basis. So transfer of all that information in terms of the cash bookings, along with the month-end interest accruals and mark-to-market valuations, would always generally have happened at the end of the period, whereas we're seeing a much stronger move towards delivery of weekly files, daily files, bi-weekly files, and that allows everybody to see the information. So the accountants can perform their bank reconciliations on a daily or weekly basis. So that's all up to speed. But then, as you said, that the information is there and visible to everybody on a much more instantaneous manner. And decisions can be made. Treasurers can see the information from an accounting perspective and the impact that has. They can see that on an instantaneous basis, and it allows for decisions to be made on a much more proactive basis instead of waiting for that time lag in delivery and transfer of information.
So a bit of a left field question then, maybe, and apologies for this, but like we've obviously developed a lot of robotic process automated elements to our delivery of both accounting and treasury services in general, and obviously AI is now coming into the mix a little bit more in terms of looking at logical developments within both accounting and other information flows around our systems. So with treasury accounting being such a sort of technical end of the accounting spectrum, how do you see the role of the treasury accountant changing with the development of all this automation and technology?
Yeah, changing for the positive, to be honest, because as we were saying, the information transfer should be completely, the manual process of that should be completely removed. So you're seeing robotics coming in to take away all the routine transactions, routine day-to-day, not really value adding from the accountants and the treasury perspective. So where we see robotics having a huge impact is that it releases that time for the treasury people and the accountants to look at the more complex transactions, because a lot of, even though, I mean, it is known the treasury transactions are quite complex, the financial reporting in the back of them is quite complex, but a lot of them can be routine based. And when you take that out and get the robots doing the routine based work, then you've got a lot more time released to allow the treasurers and accountants to do more analysis.
Right, yeah, so really accounting becomes more upskilled really in reality, and the technical knowledge becomes more valued really, whilst the day-to-day is kind of overtaken by technology, which is got to be a good thing in any in any sphere. For someone sort of starting out on this process and examining this process, it can seem daunting. And as I said, you've been through this many times with a whole range of significant international-based clients. Like, what would you say to someone starting out in terms of pitfalls to look out for, and what would you also say to them to give them comfort that this is achievable and doable? Yeah,
it does seem like quite a big task, and again, because I said earlier on that you are going to include as many people as possible in this process. So it does probably seem like quite a daunting task. So I would say try to break it down there's no magic switch. You're not going to flick a switch and it's going to work. So I would say try and scope the project out, try and plan it at all the different phases throughout, right all the way to the end, and then get everybody involved, get everybody to sit down and see what part of this process that you've scoped out is going to add the most value, what is going to maybe save the most time, get your delivery deadlines reduced by, half a day or a day or whatever. And that's where I would suggest you start. And also it's really important that you get everybody around that table, because you don't want to have that pitfall at the very end that you realize the file that you've created doesn't actually import the data that's needed for further analysis by the tax team or the regulatory reporting team, or whoever it is.
It's interesting that you should say that, because I'm, certainly in some of the projects that we've been involved with, like testing is really, really important, isn't it, in terms of ensuring that flow of information. What's the best sort of approach to that, do you think, in terms of ensuring that everybody's getting what they get?
Yeah, so I suppose make sure that everyone has their say really at the very start, make sure that they get involved. And then from a testing perspective, when you do get to that stage, which is, that's a good bit down the tracks, when you do get to the stage of testing, make sure that everybody sees the results, sees the output, see where it feeds. I mean, as we were talking about robotics and digital transformation, systems are now talking a lot to each other. So that connectivity thing has to be considered. And you need to make sure in that testing phase that you ensure that if the files or the information is coming out of the ERP and going somewhere else, that connectivity is also working.
And finally, Marie, if this requires, as you say, buy-in from numerous teams, and there could be a cost, be that small or large, depending on how much file development and integration work is required. So if you were selling this internally to an organization as head of Treasury Accounting or head of reporting, what are the kind of couple of key sales points that you would make to push this over the line?
So there's two, I suppose, really. The first one is the quality of the data you're going to get. So your data is coming through in a straight through process. There's no manual intervention. So once that is mapped correctly from the Treasury system into the ERP, that should be a seamless process. So you're getting good quality data and you're getting it almost instantaneous. So you have access to the information to make the decisions on an almost instantaneous basis. And then the second thing is time. I mean, you're saving time. So you're going to make cost savings in terms of being able to make decisions much quicker than in the past, because you have access to the information. So those decisions can be taken in a much quicker basis. And then obviously your staff. I mean, you will be able to release your staff, getting rid of all these mundane, routine transactions, which is essentially a waste of, well-experienced personnel. So you get their time back. And the benefit of that.
Great, very interesting. So long gone are the days of manual journals and writing tickets and Excel uploads. Is that what we're to conclude? Oh,
the journal entries still need to balance.
Fair enough. Well, thanks, Marie. That was very insightful.
Thanks, Justin.
And your experience, I guess, in implementing these sorts of structures really comes through when you point out some of those key, I suppose, common benefits and pitfalls that can be found. Folks, thanks very much for joining us today for this FTI Treasury Talks. We hope you found it very interesting. Lots of resources can be found on our website, so please pop in there and have a look. And by all means, get in touch with either myself or Marie. Both of our contact details are available on our website if you'd like to discuss anything that we've talked today about, or indeed anything else in the Treasury sphere. We're Treasury nerds, as we say, and we're always open to a conversation. Thanks.